here with 3 minutes on markets and money. We spoke today with Grant Williams, the co-founder of RealVision.com, about negative bond yields. Exactly what are negative bond yields telling us?
It says a lot about the investment environment we find ourselves in. You know, the only game in town has been front-running bond purchases of central banks now. But I think more than that, more than the capital appreciation people are buying bonds for, which, you know, in the world you and I grew up in is not exactly what they're for. This talks volumes about the fear levels that are out there, the things that people are frightened about, chief amongst which is a recession. And obviously, with this amount of negative yielding debt, a slowing economy and an outright recession would be catastrophic.
So despite the rise of covenant-like corporate debt defaults, particularly in the energy sector, no one really seems to be concerned about another financial crisis.
We've had a decade now of central banks essentially having our back. You know, we used to talk about the central bank put, but now we're all on the same side of the central banks. They're buying bonds, we're buying bonds, and we figure that, well, they're not going to do anything that hurts themselves. And so they're going to keep buying the bonds. We're very, very safe standing in line with them and buying the same instruments. But this is the big problem. To your point, we're starting to see the defaults, and that's with the Fed having raised a fraction in terms of the federal funds rate. This is why they're starting to fear that they've gone too tight, which they can keep rates low, and these guys can keep refinancing their debt at these crazy low levels. This rolling default happens all at once, and many of these companies, a number of zombie companies out there, you know, the number of companies that can't service their debt from their cash flow is extraordinary. And so unless rates are kept at these unfeasibly and artificially low levels, the whole system is going to start freezing up. And when these defaults start happening across the oil patch, it's going to be a rolling cascade.
You know, there's more risk in the markets now than really there's been in decades, and the behavior of the yield curve and other signs are telling us that things aren't quite right in the economy.
You know, I think now there are so many people who are hanging on thinking, you know, I'm going to just step off this falling elevator right before it hits the ground and I'm going to be fine. You know, like Bugs Bunny used to do in the cartoons. If I've had 10 years of gains after the worst economic downturn that we've seen since the Great Depression, and you're going to tell me that there are signals flashing that have a 90% chance of telling me that I've got some serious headwinds coming my way, I'm sorry, but I'm going to turn and start playing defense. It's that simple. I don't want to give up those gains. I don't want to take a chance that I can step off that falling elevator. I don't understand why people are getting these signals. They are starting to say, okay, I'm going to be wrong if I follow this one time out 10. So I'll take my chances. And if I'm wrong, no one's going to stop you getting back into the markets. Okay, if you're wrong, the recession doesn't happen. Maybe you miss out on some gains, but I tell you what you will miss out on, and that's a heck of a lot of volatility in the next few months while this signal tries to figure out, is it right, is it wrong? And I think if you can sidestep volatility and invest when you have tailwind rather than all kinds of cross currents, it's just a much more sensible way of doing it.
And that's 3 minutes on markets and money. Be sure to look for the full interview coming up very soon on our YouTube channel, The Lance Roberts Show on YouTube, or on our website at realinvestmentadvice.com.